What's going on? Welcome back to the channel. So today when I talk to you about Lucid, I want to go over the good, bad, and the ugly from their most recent Q4 earnings. So I want to go over all the things you need to know, but first make sure to hit that thumbs up, and with that, let's get right to it. So right now, Lucid during the pre-market is down about 3.63%. So I guess in Lucid's case, they're rather lucky that the market is very hyped up and kind of moving higher, because if not, if this was another sell-off similar to last week, Lucid would have been a little bit of a difficult day for them. But nonetheless, getting right to it. So their earnings did come out. There was a couple of things that was worthwhile to kind of mention. So starting off with the good. And unfortunately, a lot of their good things kind of overlapped and kind of with some negatives, if that makes sense. But I did make quite a lot of notes. So ultimately, when it comes down to it, AMP2 is ahead of kind of schedule. So that's at least a positive. There is a lot of cost cutting measures going on. So most recently, they just laid off 12% of their workforce, a lot of which was non kind of production related positions. And one thing to take note of, though, they didn't actually mention it, but with the most recent acquisition of the 𝗪𝗧𝗧 facility, they actually retained a lot of that staff. So it is fair to assume that since they're not really doing anything with that facility, that they're going to lay off that staff. So again, they didn't really say that, but that would have been the logical thing, possibly. But nonetheless, they are doing some meaningful cost cutting, and in fact, that 12% does work out to be $500 million in savings over a 3-year span. And initially, 𝗪𝗧𝗪𝗧, during the kind of when he mentioned that, he said it was more front loaded. So first year and second year, that's most of the cost savings. During the analyst question and answer period near the end of the earnings call, we did have BNP really asking about why is it 3 years? And I think that was a very bad way to end the earnings, because 𝗪𝗧𝗪𝗧 just did not understand the question, why it was 3 years. Like, what's happening in year 3? Why is it, like, if there's layoffs happening now, why is there any savings at all in year 3? So unfortunately, didn't really get a good answer to that, but nonetheless, it is estimated that they're going to be saving roughly around $500 million in 3 years. So very good stuff. Of course, they kind of mentioned profitability. That's their it'll help towards profitability. They did also mention that by Q4 2026, they are going to be able to be reducing all the unit costs by 20%. So they're working on things behind the scenes. We've seen a couple big kind of news PRs about big partnerships and so forth, just to get costs down. So they do estimate 20% reduction by Q4 2026. They mentioned, I'm putting this as a positive, I guess, somewhat, but they did mention that they have enough liquidity up until Q1 2027. In the past, I've always called BS on that, saying that it's not accurate and stuff like that, which has been correct. Every single time they've mentioned that they have sufficient runway up until like X period, it's always wrong. The only difference with this time is now Lucid has, I think it's around $3.5 billion in line of credit that they can access. When they access that, they don't need to let shareholders know. It's not anything dilution. We'll just have to look on future earnings just to see level of debt. So they'll be able to not have a true dilution event, probably up until Q4, late Q3, early Q4 of 2026. So again, I think this is probably going to hold up to be fairly true and accurate. Aside from that, though, they kind of mentioned about how they're really going to be focusing more on quality, not just pumping out vehicles. I don't know if that's their way of kind of spinning the narrative about 2026. So yeah, ultimately, those are some of the real positives that I did see. And again, 20% reduction by Q4 2026. But they did mention already that tariffs have been kind of damaging to them, to their bottom line. But a lot of their current cost-cutting measures kind of counter the tariffs. So yes, the tariffs are kind of a big issue, but they've been able to currently cut costs enough where it balances out. So that's, again, something to just be aware of. They did mention that in 2025 that there was roughly around 10,000 in tariff expenses per unit that they don't anticipate in 2026. Unfortunately, 𝗖𝗓𝗡 didn't really elaborate on that, but again, that kind of is a positive that somehow they don't anticipate in 2026. I don't know if that's because of the most recent court ruling, Supreme Court ruling, but that's, again, something maybe we can kind of find out, or if there's a follow-up interview or something. They did also, I guess, for face value, they did have phenomenal growth for the revenue, so record growth, so they at least beat on that. Earnings per share was a miss, and I feel like the only other positive is the fact that their roadmap for higher autonomous, so level 3 is targeting 2028, and then level 4 is targeting 2029. So the whole NVIDIA partnership, that's kind of their roadmap. They did allude to clearly on numerous times about their upcoming Investor Day on March the 12th, I believe it is. So that's going to be a very big deal for Lucid. So that's some of the positives. Again, there's a lot of other things that they might have stated that's somewhat positive about Uber, kind of the alphas being delivered and so forth. But that, in my opinion, are the kind of substantial ones. Negatives. So again, there's just a lot of inconsistencies and a lot of grayness, even about that 10,000 in tariff expenses that they don't anticipate in 2026. That I kind of saw as a negative, only because how does that make sense? Like technically Trump signed that 10% global tariff. That's not the greatest. Again, them kind of saying that like they want to really slow production down, build high quality products, and so they're not going to be chasing high volumes. So I don't know if they were just trying to say that to justify their targets. So again, targets right here, 2026, between 25 and 27. The fact that AMP1 alone can do 90, and then AMP2, I believe, I think it's officially 5,000, but Faisal kind of alluded to 10. Whether it's 5 or 10, it doesn't matter. But still, that's not great whatsoever. So even Rivian, they did raise their guidance, 2026 guidance, by like, I don't know, I think it was like 60%, give or take. So Lucid, in comparison, a little bit more on the lagging side. Another negative is that they kind of talked quite extensively about expansion. But their expansion was and is only the States. So I kind of wrote down that ultimately 42 new locations in the States. So Mark was mentioning that they want to build kind of new markets. They want to target new markets, but it seems to be only in the States, which is rather unfortunate. When asked about Europe, they mentioned that Europe isn't kind of a priority, not until midsize. That's when they'll start to expand. And their reasoning is luxury vehicles are not doing well there. And he kind of mentioned about how China is equally is struggling, but the latest stats doesn't really justify that. So I feel like that was kind of some of the negatives. Again, I feel like there's a lot of just other things I could bring up, such as no CEO announcement. That's clearly a very big deal. Even going over here for a second, these questions, one thing that I don't like is how Lucid just handpicks these. Like technically it's a voting process. If 899 votes or people feel this is the best question that we want to know, well, they should answer it. That's just, again, it might be unpopular opinion, and I know that question was rather stupid, but still, that was the most voted question. Like, don't do these if you're not going to actually follow through with that. So how much longer until Lucid starts making money? And yeah, they skipped over that. They answered, I believe it was this one, this one, this one, then they skipped a lot of other ones. Like even this one, was the biggest constraint on deliveries right now demand, production capacity, or logistics? That is a very good question. In fact, that should have probably been number one in fairness. But they kind of skipped over that and just went straight to Andrew. So I don't know if they were trying to, again, kind of portray a certain narrative and all the other fun jazz, but I did not like how they're kind of handpicking all of that. I know Mark, when he came on the scene, he was all about marketing. Technically, if you look at the transcripts, and I can kind of go deep into this a little bit more on my Lucid video that I'll put out later today, where I go over some of the data points, the typical type of video. Mark did not mention once marketing. So I don't know if marketing is just being tossed out the window and they don't really care about that anymore. Especially like logically, World Cup being in North America, that is a huge opportunity for Lucid. But whether they actually do that, I don't know. It didn't sound like they want to do anything like that. They're also mentioning, I found this as a negative, they're clearly just trying to, again, kind of portray something, but they did say that the whole 7,500 tax credit, or the credit that was taken away end of September of 2025, all of that's an overreaction, and that the sector must do a better job to educate the public. That is exactly what Mark did mention. So all in all, like, that's, I don't know, that's a massive excuse. So I think that 7,500 is and will be a big deal. So again, you kind of have that, just a lot of excuses, how I saw it. They didn't actually thank the PIF, interestingly enough, in this earnings. So that was also something just to kind of take note of, though. So yeah, I feel like just the bar was set this is why probably we're not seeing some crazy price action, negative price action, because the bar was already set very low for them, and they luckily enough beat on their revenue, missed on earnings, and I would consider what they gave for guidance to be subpar. So they only hit one of the three, unfortunately. So that's, for the most part, some of the things that I felt were good, bad, and the ugly from their earnings. Again, if there was anything that I did miss, let me know in the comments below what kind of stood out to you. But yeah, they were, I think, in my opinion, playing it rather safe. And so a lot of their answers were rather safe. One thing as well to take note of, though, is memory. When asked by TD Cohen, Mark did mention that they are watching that. Currently, there is no shortages, but costs are increasing dramatically. That's DRAM. So yeah, that's again something, maybe another supply chain issue type of thing might occur down the pipeline. So let me know your thoughts. Don't forget to hit that thumbs up. One final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put up daily, day trades, numerous swing trades. Worthwhile to pop over there and check that out. With all that, appreciate all of you watching.